So Reliance Retail is a behemoth, right? I think it is possibly one of the largest retailers in India, and it is one of the top five retailers across the globe as well. So the agenda for the day would be to understand what Reliance Retail does, get a basic understanding of its business, what lines of business is it into, what is the split of revenues, what is the strategy, and then we will take a 15-minute deep dive into how Reliance Retail is doing things differently, or what is the entire idea behind how Reliance Retail is operating. Right. And lastly, what we'll capture is, because the ultimate goal is to make a decision whether or not to park your money and to invest into Reliance. So we'll be covering the valuation, the current valuation, the past valuation, and what we think, in our opinion, is are the things that an investor should consider before investing into Reliance Retail. So without further ado, let me just get started. Um, Great. So to start off, I think what the idea was to first start with what will we be covering today. So the coverage primarily would be on the lines of getting to know what the company does, getting to know what are the lines in which the company operates, what is the company's economic moat in these lines, what are the competition which is it is facing, what are the things the company is doing differently, and lastly, what we'll look at is how does the valuation play out and whether it sounds like a good investment for a at the current market price. So before we get to that, I think what we should look at is why Reliance is into the retailing space at all. So how big is the market? So just to give you a broad sense of the market, I think the retail market in India is pegged at $800 billion for FY 1920, and it is slated to grow at a CAGR of more than 10%. So just to give you a sliver, 1 billion is roughly 7,000 crores, and therefore India's retail market is somewhere close to a 70 lakh crore figure. Out of this, the organized retail space. So when I say organized retail space, this basically means anyone who's selling in a retail organized outfit. If you're buying from modern trade or if you're buying from an e-commerce platform like Flipkart, Amazon, Grofers, Blinkit, Zepto, Reliance, DMart, uh, that market in itself is roughly 10% of the total retail market. So the total retail market is close to 70 lakh crores, whereas the organized retail market is close to a 70 lakh crore figure. The organized retail space in itself is supposed to grow at a valuation at a CAGR of 19% per annum, and it is supposed to increase. It is expected to increase to $231 billion by FY 2024. Uh, Coming next to the unorganized sector, which is actually the major portion of the entire retailing market. So, just to cover the base again, 70 lakh crore is the retail space, 7 lakh crores is the organized retail space, and the rest, the 90% of 70 lakh crores, is the uh, unorganized retail space, which is going to go and possibly touch over $1 trillion during the same period as this, right? And this makes the unorganized retail space one of the most attractive consumer opportunities across the world, right? And how, in our analysis, we found Reliance Retail to be different than what everyone else is doing is not just is it focusing on the organized retail portion. The activities of the company are hugely focused towards making a dent in the unorganized retail space as well, which is actually the major portion of where the overall value lies. So coming to a little brief about how the company has panned out in the last 14 years since it has been expanding. So currently, Reliance Retail has approximately 11,000 stores pan India, out of which it is very densely populated in the south, where it has more than 3,300, 3,400 stores. In the north part of the country, which comprises of this entire section, it has close to 2,500. It has close to 2,600 stores. East again is slightly less densely populated with around 2,500 stores. Coming to the split of stores as per the business vertical, The consumer electronics, which includes the connectivity stores, account for the majority of the stores across India. So out of say 11,000, I think 8,500 or 8,200 is connectivity or consumer electronic led stores. Fashion and lifestyle is close to I think 2,500, and lastly, grocery is close to around 900 950 stores pan India. So this is how the retail span and the retail presence of Reliance Retail in India. It is actually one of the fastest growing retailers in India, and it has grown in terms of store addition at a drastic CAGR of 19% for the last 12 years. And this is how it has actually reached this fabulous count in terms of store additions. Coming next to what is the company's entire strategy to approach this market. So it is, so I think the difference between any other player which we are evaluating and Reliance Retail is it is not looking at a particular segment. So it is not looking only at e-com, it is not looking only at modern trade, it is not looking only at mom and pop stores, but it is looking at an entire ecosystem to converge into one particular stream, and therefore it has a play in every segment of the supply chain which is present. So right from designing and developing consumer insights, design expertise, brands, uh, to sourcing in the ecosystem by making a network of producers, MSMEs, regional and national brands. It is expanding a retail network in both physical stores as well as digital platforms. And in terms of the segments in which Reliance Retail is playing, they are largely in four segments, which is electronics, fashion, grocery, and pharmacy. And pharmacy. So moving to how does the entire space or what is the entire business of Reliance Retail? So if I can give you a rough bird's eye view of Retail's figures, it roughly does a top line of 1,40,000 crores a year. Out of this, it is split into these five segments, which is consumer electronics, fashion, grocery, pharma, and connectivity. In this, connectivity accounts for roughly, I think, 33% of the entire revenue base, which is roughly close to 55,000 crores of the top line. Consumer electronics is the next largest set at 45,000, 44,000 crores in terms of top line. So this is slightly larger than I think 25%. Grocery comes in third at 34,000 crores at an annual sale figure. Petro Retail, which has now been demerged, but these figures are for FY20. So Petro Retail was at 14,000 and fashion and lifestyle is at 13,000. So roughly out of overall top line of 1,50,000 crores, connectivity is at 50, consumer is at 45, grocery is at 35, petro is at 14, and fashion is at 13.5. So this gives you a bird's eye view of where Reliance Retail is actually generating that humongous top line. Now, what we'll do is we'll take 5 minutes to deep dive into each of these specific lines of business and see what is their strategy for approaching each of these segments. So, starting off with consumer electronics. So, I think consumer electronics is one of the largest segments contributing to Reliance Retail's revenue. It contributes close to 45,000 crores of top line. And what are the measures which Reliance is taking here? So it has obviously set up Reliance Digital physical outlets, which is a consumer electronics store and product experience zone. So it has 300 plus national and international brands in Reliance Digital. Along with this, it has Geo Digital Life. These are smaller stores which are focused on offering communication services, and generally they have a smartphone exposure. And this is by far the largest in terms of numbers of stores. So this particular Geo Digital Life has an expanse in more than 7,000 towns, which I think translates roughly to more than 8,200 stores pan India. The third line of business is Reliance Rescue, and this is Reliance. So, or not just Reliance, is India's actually first multi-product, multi-brand service network, and they are setting it up on a pan-India basis, wherein all products of all brands can be serviced under one roof. At least that is the thought with which Reliance Rescue has been set up. Along with this, coming to the new age digital platform, so Reliance has set up RelianceDigital.in, which is basically Reliance's own digital shopping website, wherein you can go and select and buy. and the delivery might actually be done by a Reliance digital store from one of the warehouses or from a store which is close to your pin code. This also extends out into GeoMart, which also services some electronic and communication needs. So coming next to fashion and lifestyle. So what is interesting in fashion and lifestyle is this pyramid, right? So this is the entire fashion demand of the country. So it has either a mass segment wherein there is newcomers, there is Reliance Smart, Trend Small Town. So this is focused towards a very mass diaspora. People buying anywhere from a 50 rupee ticket size to a 500 rupee ticket size. The next segment is the economy segment, wherein Reliance is offerings like Reliance Trends, Trends Footwear, Trends Men, and Trends Junior. Next comes the mid-level. Mid-level is basically Agio, Project Eve, Marks and Spencers. And the luxury and the premium is what has been characterized by Reliance under Reliance brands. So this has been set up as a separate subsidiary, and all of the brands which Reliance has tied up with is a part of Reliance brands. So we'll go deeper into Reliance brands, but just to give you a overall bird's eye view, uh, how Reliance is driving the entire fashion pieces, it has a number of stores in terms of Reliance Trends, which becomes fashion destinations across the mass and the economy tiers. Trends footwear becomes the entire footwear chain. This again spreads across economy and mass. Then you have Project Eve, which comes in the mid category. RBL is a partnership of 45 international brands which are actually catering to the premium and the luxury segment. Apart from this, they have Reliance Jewels, which is one of the largest destination for fine jewelry, and they acquired Hamleys. So Hamleys was a global toy company which Reliance had acquired a while back, and this is actually present in 17 countries. Apart from this, it has many mono brand websites. So these are either companies which they have acquired, or these are companies in which they have actually tied up. Along with this, there are a bunch of new age digital platforms like Agio, Urban Ladder, GeoMart, and Zivame. These are all online platforms through which Reliance Retail is servicing clients. Urban Ladder and Zivame are again acquisitions which they had done in the last 2 years, whereas Agio and GeoMart are their own initiatives. Now, digging a little more deeper into the luxury and the premium segment, so this is how the entire segment plays out, right? So just coming back to the slide, the value segment is played out by Payless, Florma, Trendsman, and Trends Junior. The mainstream is played out by brands like Agio, Project Eve, Tallywheel, Reliance Jewel, Hamleys. In the premium segment, you have Pottery Barn, Superdry, Dune, Scotch and Soda, Pottery Barn Kids, and Uncle Moeller. And these are the affordable luxury and the luxury brands, wherein a lot of exclusive tie-ups have been done by Reliance, and they expect this to pay off really well going forward. Next, after covering consumer electronics and fashion, we move to grocery. Under grocery, they have a number of options. So Reliance Fresh Signature is actually Reliance's gourmet retail chain. Smart Superstore and Sri Kannan Smart. This is again an acquisition, but Smart Superstore is basically a supermarket format which Reliance is running. And Smart Point is a neighborhood multi-purpose store. So these are the smaller ones which open up in large numbers. These are larger stores which open up in smaller numbers, and these are absolutely gourmet stores focused towards the tier one cities. And as far as their digital offerings go in the grocery space, Reliance has GeoMart, which is actually having the widest footprint of hyperlocal delivery. It is present in more than 200 cities, and this actually gets integrated with Reliance Fresh, Reliance Smart, and Reliance Smart Point for organizing the fastest deliveries that there is. Apart from that, I think what is most important in Reliance's grocery play is this assortment of own brand portfolio, which is very close to, and which is very important as far as their future plans go. So Reliance actually plans to uh, push more and more private labels, and so that they have more control over the supply chain, they have a better pricing control, they have more control on the margins, and they get a bigger share of the pie. And over the last 10 years, it has come up with, I think, more than 25-30 brands in the private label space. And these are brands which are actually placed very close to existing brands. So just for example, Good Life would be placed close to brands like Ganesh. So this will be your everyday dal, chawal, spices. Your Desi Kitchen gives you some spices. Safe Life gives you some cleaning products. Enzo, again, I think this is floor cleaner, and this again is a segment where they have figured out that there is very little brand loyalty, and therefore, if the product placement is right and the product quality is right, it is very easy to convert customers. We'll get back to the private play in a bit. So covering the last two segments in which Reliance Retail has a play. So the next one is pharmacy. So Reliance actually acquired NetMeds in the last year, and it forayed into pharmacy in the last year itself. Therefore, the numbers for pharmacy sales are very small. The idea again, which Reliance is playing on, is on an omni-channel pharma strategy, wherein it plans to encompass digital plus physical stores. So I think they have tied up with more than 188 physical stores for the pharmacy deliveries, and they have acquired this platform called NetMed. So NetMed was one of the top three players in the digital space in the pharmacy section. So this digital space is captured by three players largely. So it is Farm Easy, Tata 1mg, and now Reliance NetMeds. Connectivity, which is one of the largest contributors to Reliance's top line of 55,000 crores, is basically sale of Reliance packs, Reliance Geo SIMs, and this is done through a network of more than 8,200 Geo stores and a vast network of retailers across the country. So this gives you a broad level view of how the entire business is structured. What is the overall top line? What is the contributing uh, landscapes? What are the sectors which Reliance Retail is basically into? Coming next to how has the numbers look like? So just to cover numbers from a very macro perspective, in 2017, Reliance Retail had a revenue or a top line of 32,000 crores. Whereas in the current year, in March 31st March 21, it gave a top line of close to 1,40,000 crores. So this is a jump of 4x within the last 5 years, within the last 4 years actually. Uh, PBT has gone from 449 crores in 2017 to close to 4,500 crores, which is like a 10x jump in the last 4 years. So, like I said, roughly 1,40,000 crores is what Reliance generates on an annual basis. Out of this, 8,000 is what it produces as EBITDA. It has been profitable for quite a while, and in the last couple of years, it has given a bottom line close to a 5,500 and 4,500 crore levels. Apart from this, I think everyone would remember the COVID days when suddenly we all of the markets were down, but we used to hear date back to back announcements daily on the fundraisers which were done by Reliance Geo platforms first and then by Reliance Retail. So Reliance actually raised 47,000 crores for a 10.09% stake dilution, and this was largely completed between September and November 20. Right. So I think they raised close to 47,000 crores at for diluting a roughly 10% stake. Now, what is of note here is that at this valuation, RRVL, which is the parent company, in which this entire fundraising was done, is roughly valued at close to 4,70,000 crores, right? And this why am I highlighting this here is because I want to take up valuation. I'm going to take up valuation then in the next couple of slides, and this will actually form a benchmark onto how we can value the company, right? One critical point here. So the fundraising has been done by RRVL and not RRL. So the company which we are speaking about and which is available in the unlisted markets is Reliance Retail Limited, whereas the fundraising was done by the parent company, which is Reliance Retail Ventures Limited. And Reliance Retail Limited is a subsidiary of Reliance Retail Ventures Limited. So I think good enough coverage in terms of what Reliance does, what is the top line, what is the financial look like, what is the scale, uh, what are the various business segments it is operating in, what is its plan for each of these segments. Now let's get a better understanding into what is Reliance trying to do, because we know that whenever Mr. Ambani is planning something, he is looking at a very long game, and he's looking at absolute market domination. So there are three things we actually came up with, which is specific to Reliance, which it is doing really well, and which we think, apart from all the good work which they would have done in the past really makes a dent, which will really make a dent going forward. So coming to the first one, this is the disruption in the retail distribution space. So just to give you a little more in-depth understanding of how this our distribution works is, there's a farmer or there is a raw material provider. He supplies goods to a manufacturer. This manufacturer then sends the goods off to a distributor. The distributor then sends it to wholesalers. The wholesaler sends it to retailers. And you actually go to a retail outlet and buy whatever you need. And that is how the end product reaches the final user, which is the consumer. And this is how things had been going for a long time. So I think from the very beginning of time, I think there were producers, there were manufacturers, there were distributors, wholesalers, retailers, and this was running really well. So just imagine any company like ITC, Marico, HUL, all of these guys who used to procure, they used to have manufacturing processes, and then they used to have a huge distribution retail network, which used to ensure that you are at a comfortable position and at home, very close to your home, you can go to a store and you can buy their products. But what Reliance has done is it has completely upended this entire distribution process. So now, instead of uh, going through this traditional distribution mechanism, what Reliance does is it has made its Reliance retail stores and its GeoMart a direct method to buy, and for Reliance outlets or for the retail outlets to also acquire these goods. So how can you now place an order? So you can essentially directly place an order with Reliance GeoMart, and this order will be picked up from a Reliance retail store by a GeoMart delivery person and delivered to you. So this is the disruption as far as the consumer space goes, and this is very similar to what Dunzo has been doing, or what Blinkit and guys like Zepto are doing. So the idea is they create dark stores. In these dark stores, they store the most frequently ordered SKUs, and then they simply use their delivery personnel to directly deliver the goods to you. But how Reliance does it differently is it actually has a large physical presence wherein you can actually go in and buy as well, right? And what Reliance is doing is it is actually onboarding Kirana shops. And these Kirana shops are being given the entire supply from Reliance retail stores itself. So, say a shop from where you have been buying your grocery store. Let's call it Rajesh Grocery Stores. So, if you were buying a say a packet of chips from Rajesh Grocery Store, Rajesh would generally have been buying these goods from a distributor. Now, what Reliance is doing is not just B2C, but it is going the B2B route as well. So, Reliance is actually going to these Kirana stores and offering them rates which are better and landing prices which are better than what these companies, distributors are giving them. And it is actually capturing this B2C market as well. And the largest part of the game plan which Reliance is working on is to use these Kirana stores for delivery. So the idea or the final game plan on which Reliance is working is, say if you sitting on your home on your sofa watching TV decide to order something of GeoMart, and if there is no Reliance retail store available close to your space, Reliance will actually redirect this order to a local Kirana store, which it would have impaneled beforehand, and then it will pick up the delivery from this store and get it delivered to your house. And this is something which no one in the grocery delivery space is doing right now. None of the quick e-commerce delivery guys are tying up with Kiranas. None of the other departmental stores are using Kiranas as their delivery module. And if Reliance Retail is able to do this, it will actually be able to hack the entire chain and to have a much wider network of distribution than what it currently has. And for this, it is doing a lot of initiatives. So they are putting up POS machines, they are putting up accounting softwares with retailers, they are putting up WhatsApp integrations with retailers, wherein they are making it as easy as it is possible for a retailer to order goods not from a distributor like he was doing earlier, but directly from a Reliance retail store itself. So this is how the disruption in the retail space is happening as far as Reliance Retail goes. Now, with obviously disruption, there are people who are facing issues. So, companies like GeoMart, Metro Cash and Carry, Broker, Udan, uh, uh, Ge- uh, Metro Cash and Carry, All of these are now being pointed by the All India Consumer Protection Distribution Federation, which is basically an association of these FMCG distributors. And they are saying that, boss, you are supplying to these retail stores at prices which are lower than what even we are getting, which is slightly unfair because then we are becoming uncompetitive and therefore we are being driven out of our own businesses. So this may pan out, and this may turn up into a slightly ugly fight between the FMCG companies, which are the manufacturer and the marketers of these products, and the final uh, uh, stores which are now servicing these kirana outlets. Coming next to the second prong strategy of Reliance is acquisitions. So what Reliance is doing is it is focusing very heavily on acquisitions. It is acquiring companies at a very, very practical valuation in specific areas where it knows that it will have to have that brand and it will need support from an acquisition, and growing that particular item in-house will take a lot of time. So in the Reliance retail space, Zivame, which is into lingerie and personal wear, Urban Ladder, which is into furniture, Milk Basket, which is into grocery delivery, Dunzo, which is again into hyper local delivery, brands like Abraham Thakur, Kalaniketan, AKOK, Ritu Kumar, Rahul Mishra, which are all very luxury brands. So all of these have been acquired by Reliance Retail in the last 2 years, and they are very active. So roughly, I think around 24 companies, 2 dozen acquisitions have been done within the last 3 years itself. So which is beyond amazing in terms of how the entire organic plus inorganic growth strategy has been executed by Reliance. And the third is what we had discussed slightly in the grocery slide, the private label play. So what Reliance is doing, it understands that now it has a massive distribution reach, right? So it has people on feet in the Kirana stores. It has a huge Kirana network. It has a huge network of Reliance retail stores. It has GeoMart, and therefore now it has started pushing its own brand. So this particular picture is very interesting. So if you see, there's Maggie noodles and then there is Snack Tag. So Snack Tag is actually a Reliance retail private brand, and these packets are so similar that possibly you might pick up Snack Tack one day and you would actually think that it is actually Maggie which you are consuming. So this is how closely resembling products are being launched by Reliance, and going forward their idea is to service a majority of their sales by private brands and use all of this as a play to increase their entire distribution. So if I can give you a brief idea of how big the Reliance's private label play has become. So in apparel segment, the private label play is as high as 70% of the total sales. In case of footwear, the entire private label plays I has as 40%. So if Reliance is selling 100% is selling 100 rupees worth of footwear, 40 rupees is what it is selling as a private label play. Private label gives the company a lot of control over the pricing. It gives a lot of control over the distribution, the supply chain, and most importantly, it gives a larger piece of pie to the final seller. So Reliance Retail, if it would make say an average of 10% commission on selling a branded product with its own private label, it could be as high as 25, 30, 35%. So I think this would really complement the bottom line going forward if it is able to actually pull this entire thing off. Coming next to, I think this is one story I think which has been in the news on and off for the last 1.5 years, the acquisition of Future Retail. So I'll not go into too much detail, but the very macro overview is that Amazon had purchased some stake in Future Coupons with a right that any sale of Future Enterprises would require its approval. And Reliance actually went out and bought out Future Retail in the interim, and then Amazon actually took Reliance to court. Then they went to the Singapore Arbitration Committee. Then there were decisions given by the High Court. Then one fine day, what Reliance did is it very sneakily acquired rights to the major leases for all large Future Retail stores. And one fine morning, when Future Retail employees actually went to the store, they actually found that their hoardings and their brands had been removed, and Reliance Retail had actually uploaded on their own banners, and their staff was then had started servicing those stores. But again, this is in a stalemate position, so we don't very clearly know what will happen about this acquisition. This is one of the largest acquisitions Reliance Retail has ever done. It is close to a 24,000 crore valuation, which Reliance is paying to acquire Future Retail. Future happens to be the second largest player in the retail space. And if they are actually able to complete this acquisition, Reliance would definitely be the largest player with absolutely no one to even come close to in terms of store area and in terms of reach. So let's hope this acquisition bears fruit and they are actually able to complete this acquisition going forward. But it may take some time because there have been the latest verdicts by the courts have been in favor of Amazon and not Reliance. So just to give you an idea of how the overall space looks like, Reliance Retail has possibly more stores than the rest of the entire competition combined, at least in number of stores. In terms of top line as well, it is way ahead in comparison to FRL or DMart or Spencer's or Pantaloons or Shoppers Stop. So it has a huge uh, uh, you know run up as far as both the store count, the reach, and the overall sales go. So, the first section we covered what is the entire Reliance retail story. So, we covered what is the business segments, what is the revenues, how has the entire play been done. The next section was our specific inputs into what is the strategy under which Reliance Retail is playing out. The first one was definitely the Kirana strategy, wherein it was tying up directly with the Kiranas and it was disrupting the entire retail supply chain. The second was the acquisition strategy, where it is getting a both organic plus inorganic supply done very well so that it can grow very quickly. And the third was the private label play, wherein it is trying to push more and more products wherein it has a higher margin and therefore it'll show much it'll give them a much higher contribution to their bottom line. So all said and done, I think it's a fabulous company. The goals are tremendously high. The execution till date has been extremely fabulous. The way the company has grown in the last 5 years, I don't think a lot of people could have pulled this off except for Reliance. But coming down to brass tacks, so coming down to the valuation, right? So all can be good, but you cannot enter at a price which is too high or where there is very little margin of safety. So while we will not comment directly on the valuation, but we would actually give you a small breather into how the other research firms have actually valued Reliance Retail. And then you can actually take inputs from that and form your own opinion as to whether Reliance Retail is rightly valued, overvalued, uh, and what should be done in terms of an investing approach. So this is how the Reliance retail valuation has played out in the last 2.5 years. So Reliance Retail roughly became available in the unlisted and the pre-IPO market at around 450 rupees in early 2019, and it very quickly within I think a couple of 6 weeks it went up to 900 per share. Then there was a setback, and the setback we talk about in the next slide. So Reliance actually gave a proposed swap ratio of 4 is to 1, wherein Reliance retail shares would have been extinguished, and in respect of that, Reliance Industry Limited shares would be given to the shareholders. But and we got featured on Economic Times when we mentioned this. But the idea was that if this proposal would have gone through, a lot of people would have lost a lot of money because the pricing was almost half of what the market pricing then was. But fortunately, Reliance actually rolled back the entire swap proposal, and I think now they are proceeding towards an IPO. Therefore, any such risk is now not expected to happen again. So coming to the valuation perspective, so recently Jefferies had done a valuation. I think this was close to a year and a half back, and they had ascribed a valuation of close to $100 billion to Reliance Retail. And this was actually a valuation by for Reliance Industries, and to get to a SOTP valuation, they had actually done a valuation for Reliance Retail as well. So what we did was we just calculated how much does this translate to a per share basis, right? So at a market cap of 100 billion, it roughly comes to a 7.5 lakh crores in terms of market cap. If you divide this by the number of outstanding shares, it roughly comes to a figure close to 1555. So 1555 rupees is what it comes if you divide 7,75,000 crores with the current number of outstanding shares. However, what we found when we were doing a deep dive of the entire annual report is that there were a number of convertible instruments as well. So apart from the paid up equity of 4,900 crores, which was anyways there were convertible preference shares up to the tune of 80 crores, which will convert into 400 crore shares of Reliance Retail. Plus, there were debentures which had been issued to the tune of 330 crores, which would actually convert into 33 crore shares, equity shares again. This would actually add from a 499 crore share base to roughly 433 plus 499 crores, which will effectively it will double the entire equity base of the company, and therefore the diluted equity as per this revised capital structure would be close to a 932 crore share, giving you a share price of close to 832, which is what a lot of investors missed. And we have tried conducting seminars and educating people on how this entire capital structure is moving. So takeaways from this slide: Jeffries valued Reliance Retail at 100 billion. In the current structure, it is 1,500 per share. With the dilution, it will come to 832 per share. If you, however, compare this to the current pricing in the pre-IPO markets, it is at a price of 3,300 per share. It has recently narrowed a little to 3,100 rupees per share. But still, we think that this is something which a lot of investors need to understand and a lot of investors need to agree to. Next, to again back up this entire point of the valuation, we give you a recent uh, SOTP done by Money Control. So again, the SOTP was done for Reliance Industries Limited, where they had arrived at a fair value of 2630 for Reliance Industries Limited. For this, if you see, they had described a market cap of 9,84,000 crores for Reliance Retail, and this is at a 3.5x sales for FY24 at an 85% stake. So this I can probably increase to close to 12 lakh crores if I include the entire stake of 100%. So even at say at a 12 lakh crore, my current valuation for Reliance Retail would go up from say a 1,500 which was done by Jeffries to possibly close to 2,000, 2,200 as per Money Control. However, this still would not account for the dilution which will happen because of these two instruments: the convertible preference shares worth 80 crores and the convertible debentures worth 330 crores. So this is a real game changer which investors need to be really aware of, because this is something which no one speaks about, right? So yeah, sorry, I think yeah. So once again coming to a valuation analysis, so we thought we'll just do a slight understanding of how the entire valuation works out in terms of EV to EBITDA. So if we have a look at the EV to EBITDA ratio, Reliance Retail at a current EV of close to 13 lakh crores would be at a EV to EBITDA of 162, whereas DMart is at 94, so Amazon is at 18, and Walmart is at 14. So what this is basically showing us is that while Reliance Retail is an excellent company when it comes to the plan and the execution, however, the current valuation in the market is something which needs to be very carefully looked at, right? Because you can buy a very good company, but if you're buying it at the wrong valuation, there'll be very little upside, or there might actually be a severe downside also as far as your investments go. Coming next to the IPO update, so Reliance Retail is actually, there was a restatement by Mukesh Ambani that Reliance Retail would actually be looking to raise anywhere between 50,000 crores to 75,000 crores uh, in the next couple of years. So it might not come within the next 1 year because they've not filed DRHP, etc. yet. But hopefully within the next 2 to 3 years, Reliance Retail would come out with an IPO, and it possibly might be much larger than whatever has been the largest IPO. So LIC was actually the largest IPO that the Indian markets had seen at 21,000 crores, but Reliance Retail possibly would be more than 2x of what LIC had raised. So I think this might be one of the reasons because of which Reliance is actually planning to list uh, Reliance Retail and Reliance Jio both on Indian as well as global exchanges, because the appetite in the Indian markets might not be able to absorb such a large IPO size. Right. I think this is a brief summary of how our entire understanding on Reliance Retail has been. What we would do now is possibly open up the floor for a 10-minute Q&A, and please share your thoughts, your feedback as a part of the comment section, and whatever queries you have, I am ready and happy to answer them for the next 10 to 15 minutes. Let's start. Great. So I think there are already some questions which have come in. Uh, I think Mr. Ramakumar is asking when will its IPO come out. So Mr. Kumar, I think we answered that. In our opinion, we think that the IPO should come out within the next 2 to 3 years. The IPO size should likely be in the range of 50 to 75,000 crores, and they might actually go for a dual listing, both on the Indian and global exchanges. Uh, then we have some questions on how good is it to hold Reliance retail shares. I think Reliance as a company has done phenomenally well, that's for sure. But the challenge would definitely be as far as valuation comes. So the valuation at the current market value and the current pricing comes to be very, very richly priced. And therefore, we might, request people to be very cognizant of the valuation at which they are entering. If the IPO will come at 8 lakh crore valuation, then price of Reliance Retail will be decreased. Yes, Ankit, it actually might go down. We are not sure. We cannot comment because the business might actually catch up to the current valuation as well. So it will be very hard to say if the valuation will come down. But if I can be very honest, I think uh, the current pricing is fairly steep. So there will be very little margin of safety for people entering at this current range. Next session, just let me check. What is the total number of? Yeah, so I'll just take the next question from Mr. Abhishek Kumar. The total number of outstanding shares of the company which which company is going to list, RR or RRVL. So in terms of, I think, total number of outstanding shares, it's around 932 crores. I think we had covered that on the slide. You could possibly scroll back on the video and just have a look. So I think 499 crores is outstanding as a part of equity, and another 433 as a part of convertible instruments. In terms of listing, we are not very sure. It might actually be RRVL which gets listed because all of the global investors have come into RRVL. But it remains to be seen, how value unlocking would happen for RRL. So it might actually be by a reverse merger or a swap with RRVL. But I think a large chunk. But I think the IPO might be of RRVL. At least that is what the commentary on the news channels has been. What's the maturity year of these debentures or instruments, Abhishek Kumar? So I think this is there in the annual report. I can possibly check and get back to you. But I think one of those instruments is supposed to mature in the year 2022 or 2023. So it was either the preference share or the debentures, which is going to get converted in the next 2 years. Uh, Sandhya wanted to know, as of now, Geo and Reliance Retail come under the same RR, right? No, so I think Geo Platforms is separate. However, Geo Connectivity sales falls under Reliance Retail. So, like I had shown you the entire segment split, out of 1,50,000 crores, 50,000 crores is what is a part of the Reliance Communications heading. That is what is the Geo SIM cards and the Geo network sales. Vivek is asking, what is your analysis of the current valuation, and according to you, is it worth buying at the current price? I think, Vivek, we covered that portion fairly well. If you have any more questions onto that, we can take it on a one-to-one basis. Is RRVL the entity that's going to list? What happens to RR shareholders? So I think it remains to be seen. Abhishek, I'm not very sure which entity will list, but I think there were two news articles which hinted towards listing for RRVL and RJPL, so which is Reliance Geo Platforms Limited and Reliance Retail Ventures Limited. Good analysis, but valuation, it looks expensive to buy. I agree with you, Prabhu. I think valuation is fairly steep, and I think that is what I've been harping on for the entire presentation. So I think apart from covering the entire company, my goal definitely was to educate and create awareness that while the company is doing an excellent job, the market might not be pricing it in the right manner, or it might be too optimistic for the current scenario. Is it the right time to buy Reliance stock? Mr. Kumar is asking. It is hard to say. I think with respect to buying, we have already discussed the valuation is steep. But with Reliance, there is a chance that they might actually uh, pull a rabbit out of the hat, and it can do wondrous things. So it'll be difficult to say if the valuation will come down, or and if you will be able to enter at a better valuation. But yes, right now it is fairly valued, or it is a little steeply valued. It's a growth company. Valuation is a play here, says Kiran. I agree with you, Kiran. Ronak says the share value must be around 1,000. That's obviously something which remains to be seen where which way it will flow. But I think this entire discussion had a very healthy data as to how the market is valuing Reliance Industries, because it's a listed company. Therefore, we get a lot of data, and therefore we are able to come at a very logical valuation to Reliance Retail as well. Got it. I think that is more or less the questions which were put up on the chat. And so I will just look at it one more time. But yeah, I think we have covered all that was to be covered here. So I think thank you everyone for joining in. I think it was great to speak to you, give this presentation, read the comments, give answers to these questions. We would be covering more such companies in the near future. The idea with which we are working right now is, the investors need to be really aware of what they are investing into. There are names which sound very interesting, and that is how people are investing into uh, a lot of companies wherein they may not be able to really make money, or maybe they might have to face some downward trends as well. So the idea would be to definitely understand their investments before getting invested into it. Apart from this, our team is there for any other query which you want. You can write to us at nikunj at Altius Investech, or you can just have a look at the credentials on our website and keep commenting on the post. Vivek is asking, can you cover TMB and Fino? We will be doing this on a bi-weekly basis, Vivek. So we'll be company covering one company in depth every alternate week, and you can subscribe to the channel so that you can get an update onto it. So the target is to cover TMB and Fino. It is definitely in the game plan. The next we might be covering is Bira, but I think definitely TMB we can take after that. So great. Thank you everyone for joining in. It has been a very wonderful session. Thank you so much, and we will come back to you with another interesting company maybe next week or maybe a week after that. Thank you. Have a great weekend. Take care.